Welcome back to Talk of the Town on 99.7, 1450 WHTC and WHTC.com.
And we welcome you back to Talk of the Town for this Thursday, March 25th. I'm Gary Stevens. It's been a while since we caught up with this gentleman, longtime investment advisor. He also spent some time as a member of the Holland Board of Education. He is Kevin Clark, and he joins us on the other side of our Zoom connection. Kevin, good morning. Welcome back to WHTC. It's been, I hate to say this, it's been too long. Welcome back.
It's been too long. Yeah, it's good to see you, Gary. It's good to be back. And yeah, it's been a few years since I've had a chance to be on Talk of the Town or just doing a regular spot on what's been going on in the markets. But we live in interesting times. And there's an awful lot we can talk about this morning. So
yes, we do have some things to chat about. You have a new venture. We'll talk about that as well. We'll also talk about some of the issues going on today. But first of all, sort of catching up a little bit, do you still stay involved with some of the education news and some of the education trends? Or once you left the Holland Board of Education, you said, that's an aspect of my life. I'm done with it. I'm moving forward.
Well, after therapy, I mean, I'm kidding. I mean, I spent 16 years on the Board of Education, and, I started out as a classroom teacher. My dad was a superintendent of schools. My brother still works at Holland Public Schools. So schools are always going to be somewhere in my life. And I do pay attention somewhat, at least on the periphery. And I think that obviously when you look at what's happened here during the pandemic, education is getting pushed to the forefront of whether it's reform, whether it's how we're going to deliver educational services in the future. All of this, I think, will be on the table for future discussions, probably not as important today, but I do think that these educational trends, I think we will see a lot of reform moving forward, because we are figuring out using technology, just like you and I are doing this morning. It may not have worked perfectly during the pandemic, but I do believe that we're going to see different ways of delivering educational services in the future. I talked about that actually when I was still on the board of Holland Public Schools, but it's been challenging, and I know for most families. But we are going to get to the other side of this, and I think that some positives will come out of it in the area of education. So, yeah, Gary, I still kind of pay attention, but I'm not as up to date on the specifics, but I kind of stay on the periphery.
And let's put it this way. I'm very much a layperson. You're a little bit more ahead of the game on that regard. But if you got a question for Kevin, a little bit about education, we'll take it at 395-1450, 395-1450. However, part of what Kevin wants to talk about with us today is that he is beginning a new venture. And it seems as if it's almost a offshoot for those who make a vocation out of being, in your case, being an investment advisor, maybe an insurance agent, maybe even a car salesman as well. You want to set up your own shop. You want to hang up your own shingle, and you, Kevin, have had that opportunity to do that.
Yeah, we are going to be launching West Michigan Advisors on April 5th, and we will continue to have our custodian be Raymond James. So we've been at Raymond James since 2007. And so this is kind of a natural progression. And I think it comes out of, the COVID experience and how you interact with clients and the way you'd like to have your business run. And this is really more on the independent side of, still using Raymond James as our custodian, but to be able to launch your own venture, it's kind of exciting. And, I'm sure I'm never going to be ready to retire. And so it just gives me something to do and keep me out of trouble, I guess, Gary.
Indeed, some of the lessons that you have learned during your time, especially with Raymond James and now moving forward with your West Michigan Advisors group, challenges that starting up your own investment advising outlet. Some of the things that you've had to foresee, maybe you were able to foresee, I'm going to have these issues when I started things up. And then you're saying, oh, I've gotten a few extra curveballs since I started putting this website together and started putting together this entity.
Yeah, I mean, all of those things are correct. And, when you start a new venture like this, it's from putting together the compliance services to marketing to getting the phones to work. I mean, something as simple as that, ordering office supply, all of those things. And, for the last 3 months, we've kind of been in that process of doing it. But we have a good group of people who've been in the business for quite some time. And, this is I think I'm starting 39 years in the business. So I think the curveballs will be managed. And we're actually very excited to get started. But, those are challenges of starting a new business. And, whether you're starting a new business or trying to keep that business going, I mean, the pandemic has had its effect, even as we've tried to get things started. It's just things move slower in a Zoom world. And when you work remote, when you are constantly having to communicate through email or Zoom meetings, I think things slow down. The productivity is not quite as high. But we're going to get to the other side of all of this. As you saw this morning, jobless claims, really very nice, under 700,000. It's nice to see that. And I think we're starting to see the momentum of what's going to happen when we get to the other side of the pandemic.
Of course, there's always a cloud among that silver lining, and the cloud. And again, this is not so much for an investment for you, or maybe unless you want to dabble in the oil industry. The Suez Canal might be blocked for a while, and that could mean higher gas prices. Here we go again.
Here we go again. Yeah. I was thinking through last night, maybe what we could chat about, and interesting. In my mind, there's still three main themes running through the marketplace, running through the economy. And, one is COVID-19, how that's behaving, vaccines rolling out, and when do we get to the other side? That theme is there. The startup, we're seeing it with the unemployment claims. The second is the Federal Reserve, policy of keeping low interest rates, not only for this year, but most likely for a number of years. And I really see that as somewhat of an extension of what happened with the financial crisis of 08-09. We're still in this very low interest rate environment. And then when you look at fiscal policy, the amount of money government is going to spend. I mean, this is a staggering number. When you talk about the most recent stimulus, COVID bill, whatever we want to call it. And I've heard it called a lot of different things recently, but, $1.9 trillion. If you go back to 2009, and when you look at what the Obama administration did, that was a $900 billion stimulus bill. So we're talking 1.9, not counting what we did 900 billion back in December. So the amount of money that is in the system, it's going to take 2 years to probably get all of this money through the economy. But when you look at those three themes, everything else is noise right now. And when you look at it from an investment standpoint, when you look at it from the market standpoint, low interest rates and this amount of money, I think it still makes for a fairly favorable outlook for investors. And I can go back and, we're looking at, where the market was, people probably forget about this, but where was the market back in March of 2009? At the bottom, it was 6,000. And here the Dow Jones average closed yesterday at 32,420. So we've gone a long ways in the market. There's still an awful lot of money on the sidelines. Back at the bottom of the crisis in 2008, we had about $8.8 trillion on the sidelines. And I remember talking about it at the time that ultimately that money would find its way into the stock market. And of course it did. And we've seen the market do very, very well. Well, even today, there's $5 trillion on the sidelines. And that's almost 15% of the total value of every stock in the S&P 500. That is a tremendous amount of money. And of course, with 1.9 trillion going to be put into the economy, that's just more and more money. And of course, what I thought would happen 10 years ago, that we would see inflation. And I think you're alluding to this as well. It's hard not to think that this won't have an unintended consequence of some, higher inflation at some point in time in the future. But in the short run, boy, there's an awful lot of money out there and looking for things to do, looking for opportunities. And when the economy finally opens back up, I think, we could be in for a very nice run in the markets as well as the economy.
Yeah, I hope you're right. But again, you alluded to it, the I word. And yeah, we're spending this money on stimulus. We got to pay for it one day.
Well, that's
year. I mean, let's, we'll worry about the future later. That seems to be a prevalent thinking among many in Washington these days.
Yeah. And I think that's the thing that worries me the most. And I think in my quiet moments, I kind of think that this doesn't end very well. And I remember the 70s. You remember the 70s, and as many of our listeners remember 1973, 74. We remember wage and price controls. We remember double-digit interest rates.
And we remember whip inflation now.
Whip inflation now, yeah. I mean, we remember all of that, and yet I think that's part of what happens is that there are many people they weren't even born during the 70s, and so I guess that dates us, doesn't it, Gary? But for those of us who remember those times, you were lucky if you could get an 11% mortgage. That was you thought you got a steal at those points. So that's the type of thing that could be the unintended consequence of the amount of money we are creating.
You mentioned the three things, Kevin, that you want to sort of focus on, and really what investors need to focus on: the COVID-19 situation, as well as the budget, the deficit spending and all that, and all the other stuff is noise. So yeah, when you hear from Jessica Ettinger just a moment ago, stocks are down, stocks are, don't take too seriously right now, right about that.
No, and I think that we kind of have had a pretty nice run in stocks, and so a normal kind of correction is what I see here. And I've been doing this a long time. And I can remember having the conversation. I was on Talk of the Town with Juke back in 1987, the day after the market dropped 20%. And so, we've always had these times where there's been extreme volatility, but ultimately you try to stay focused on those fundamental things that really drive, the economy, and ultimately what helps push the markets higher. And that's why I always try to find perspective, try to look at some balance of where we are. And, when you really look at what the markets have done over time, a lot of the money that we printed during the financial crisis, I do believe ended up in the stock market. I think that's where we saw the inflation more than anything. But, we've gone from under 10,000 on the Dow to over 30,000 on the Dow in the last 10 years. And when I look at the amount of money that's being created, when you look at the economy, I think just like a coiled spring with a tremendous amount of pent up demand, we could be looking at, another, pretty nice run here. We don't know if that will happen. We don't know if inflation will happen. I hate to say that it will definitely happen, because I was kind of saying that after the financial crisis. But, I do think that ultimately, with all the money in the system, all the money that's on the sidelines, the Federal Reserve is assuring us we're going to keep low interest rates, and the vaccines are starting, as we're rolling this out, we're doing it better. We're going to get to the other side of the pandemic. And when you see that, it's like I said, the U.S. economy is a coiled spring.
Now, if you got a question for Kevin, he'll happy to answer it at 395-1450. I'd like to ask you, maybe throw a word at you, and maybe the investment world has sort of gotten over it. The word GameStop. And what happened with that? Have we gotten past that, or has that sort of brought a little bit of a flag saying, hey, there was a loophole here and some people took advantage of that earlier this year?
Well, GameStop was our tulip mania. And I see behind you the tulip time poster. So it makes me think of, the tulip bulb mania that we saw in the Netherlands back 1600s, I think it was. So I think there's always going to be that kind of speculation. I think the markets are just moving much more quickly these days. I don't think we've seen the end of that. We're going to continue to get it, but I think the average investor should be weary of it. I don't think that fits in necessarily with a long-term investment plan. I see it more as a little bit of speculation and gambling, but it was a wild story, and it may not be over. And the same can be said for some of the cryptocurrencies that we are seeing, which maybe I'm showing my age, but I'm still struggling to figure it all out when it comes to cryptocurrency. But
I'll be honest with you, Kevin. I bring it up with other investment advisors. We don't touch crypto stuff, and I'm of the opinion, let's have some hard money, not to have any virtual money that if you don't know your password and X amount of times, you lose the money and it's gone forever. Wherever that goes, I don't know. It's too wild for me, I'm afraid.
Yeah, well, it's even, it's too wild for me at this point. I think it probably, as we have central banks really wrestling with the idea of cryptocurrencies, when we look at some of the major banks looking at it, I think until it gets to that level where we really can have some trust in it. But I'm like you, Gary. I have to write my password down or else I'm in trouble. And I'm sure there's many listeners that are just like us. So, I think that's another area that for the average investor, you don't need to be invested there. And when you look at, the markets have gone from under 10,000 to over 30,000. And that wasn't in cryptocurrency, and it wasn't in things like GameStop. So.
Let's get to a call. Good morning. You're on the line with investment advisor Kevin Clark.
Good morning. I was just wondering what's his fees run for you investing money with him.
I don't know if you want to spill the beans on the fees yet, Kevin, or not.
Competitive fees. How's that? No, always. That's a specific question, and it's always a little more challenging to say exactly what it's going to be, and everything is a little bit different. But I'd be happy to. You can contact me at kevin@westmichiganadvisors.com. Just shoot me an email. I'd be happy to give you a little more information on that. But it's a little hard to say right now without more particulars. So I guess I'm going to punt a little bit, but I think we're going to be extremely competitive when it comes to fees. But thanks for the question.
Bye.
And it's a fair question.
And it's sometimes it's based on, how much of an investment is going to be involved, how much work has to be done with it. A lot of times, and when we see with other consultations, the first consultation is free to be able to see. I don't know whether or not that works too much in your field or not, but a lot of times just say, I want to do this. What can you do for me? And it's a give and take situation, I think, more than anything else.
But the cost is a fair question, and I think it's it's one of those things that gets talked about all the time. And the importance is to be fair, to be transparent with it. And I think that's one of the big reasons we've made the move that we're going to make is that we want to be very transparent with what it costs.
Let's get
deserve that.
Let's get one more call before we're done with the segment. Good morning. You're on the line with we were going to on the line with investment advisor Kevin Clark. We'll be open line after the 10 o'clock news here on 99.7 and 1450 WHTC. So we'll wrap up our conversation. Kevin, how can people get involved with West Michigan Advisors once the rollout comes up on April 5?
Yeah, we one of the curveballs is it's taking a little longer to get that website out, so it's probably be after April 5. But in the meantime, anyone who would like to get a hold of me, it's my email address, just kevin@westmichiganadvisors.com, and made it plain and simple. Kevin@westmichiganadvisors.com.
Yeah, it's in the simple stages. When you add more people, then it becomes you have to put it down, and being as simple as that. But it has been a pleasure to chat with you again, Kevin, and be able to talk not only about the markets and the economy, but also talk a little bit about education with your background. We wish you and all involved with West Michigan Advisors well in your new venture. And we look forward to chatting with you again on a regular basis. Kevin, thank you very much.
That'd be fantastic. It's been good talking to you, Gary. Thank you.